Alrighty, good morning. Hope everyone's doing well. Today is February the 25th. It is a Tuesday. Um, Markets just shut out on Monday. We finally it was the kind of the first Monday that we didn't have a rally, right? That first dip got bought up. We actually had that pop and fade, and then we kind of stayed heavy all day. So, for really coming to the rest of the week, it really shows you that now, right after kind of rejecting off that all-time highs, right? SPY and Keys was just at all-time highs a couple days ago, and now we're having a pretty sharp reaction off that level, and just no buyers are kind of step in. The sentiment on the overall market, I'd say, is pretty low with most of the tech names as well. You can see a bunch of the tech names that did have earnings that are usually one of those growth stocks. They didn't really have too many good earnings like Hims, other ones along those lines as well. So you can really see here how now you're going to have to really come in without a bias, right? Be open to playing the short side as well. So really coming to today, we did originally have some red folder news at 10 a.m. This was a consumer confidence, but it got downgraded to an orange folder news. So no red folder news today, but we're going to keep an eye out at this at 10 a.m. This is going to be consumer confidence. The main thing tomorrow is going to be that NVIDIA earnings. And then on Thursday, we have unemployment. This is going to be at 8:30. And then we also have core PC. And then we also have the Chicago PMI. This one is going to be on Friday at 9:45. So really coming into today, the key levels and the key watches that we're going to be looking for. Let's go on to the NQ. So number one, the NQ, as you can see right here, it's flirting right around this 21,510. So your 21,510, you really want to see this daily candle close above this key area. So coming into today, you really want to see the buyers try and defend really this low right here. So right off the bat, you want to see at least some sort of reclaim either right off the bat or later into the day of this really 21,510 key area. So for the NQ, the key level that we're going to have marked out coming into market open is going to be your previous day lows. As you can see, a lot of consolidation right here as well. This also coincides with your previous day lows. What we like to see is price get above your 21,431 for this continued push back up towards your 21,510. So this level is going to be key coming to market open. What we don't want to see right off the bat, or if you what you don't want to see for long side right off the bat, is kind of the pop and fade off this level, and we just continue back down towards your previous day low. So if you are bearish, that is what you want to see. But if you're bullish and you want to see kind of a mean reversion, right, we are down 1 2 days. Usually the third day we have some sort of buying pressure and some sort of kind of recovery on the third day, right? Maybe not a full recovery into yesterday's range, but we have some sort of buyer step in, right? Let's say it drops right off the bat. Be cautious of potentially this like V shape after that first initial drop. So key levels that we're going to mark out is going to be your 21,510 on the NQ. For the QQQ, the key level that I have marked out in this case is going to be your 518. So your 518, you can see nice little reaction so far around this 518 key area on the NQ. The other key levels that I have drawn out in this case is your 520, and then I also have the area that ended up dropping yesterday, which was this Friday's low in combination, really just your Friday's low that ended up using this as resistance later into the day, right? Previous support turned into resistance. So you can see right here, coming into today, the key level that we're going to mark out as well is going to be this 520. So your 520 is the key level that we're going to mark out here on the on the QQQ. We can drag this over. So your 520 is going to be key. You can see this is really where it bounced from yesterday. We ended up breaking underneath it into yesterday's close. So coming into today, what we want to see is the reaction that we have around this 520. If we reject off this 520, what's going to happen is we're going to continue back down in towards this key area, which is your 517 and below, which is your pre-market low. If we get back above your 520, you could see this potential kind of mean reversion back inside of yesterday's range. If price does push back towards upside, really I expect this to be the top of the range. I don't really expect it to hit your previous day highs. I would just expect most likely like your 523 and potentially your 525 on the QQQ. So coming into today, we're still leaning more towards the downside, just because now, right, lower highs, the trends towards the downside, but the key level is going to be this 520, and we're going to be waiting for the reaction that we have around this 520 is going to be key on the QQQ. If you go on to the ES, the key levels I have marked out on the higher time frames is just this higher time frame 5980. You can see we've had multiple touches around this key area. This is also, as you can see, at the low of the range now as well. So really price this was the key level that we're talking about really from a couple weeks ago. And you can see in 2 days, price went from the top of the range all the way down towards the bottom of the range in 2 days, where it used to take about a few weeks, about a week to get in towards the top of the range, right? It went from Monday back all the way to Friday, like the top of the range. Now you can see in 2 days, we're already at the bottom of the range here on the ES. So you can see the volatility is there on the ES. Currently, we are at the bottom of the range. What I would like to see is now the reaction that we have off of this key area, which is your 5980, which you can see we had some nice reaction coming into market open around your 5980. So now, right, we're at the bottom of the range on the higher time frames. I would be very cautious of looking for an extended short, right? You could potentially look to short in towards this 5980, but it's going to be hard to short once you already have that push lower and you're looking for that kind of first pop. So what you like to see now on the ES is one of two things, right? The key levels that we're going to have marked out in this case, I would mark out your low that we had from Friday. This level is going to be key on the higher time frames. And then we also have these zones right here, which is going to be your 6040. And then we also have a pretty big zone towards the downside, which is your 5980. But these are daily time frame key levels. So really for the ES, we're on the 15-minute time frame right now. The other levels we're going to have marked out in this case is just going to be your previous day highs. So we're just going to mark out your previous day lows, and then we're going to mark out your previous day highs as well. What we want to see is the reaction that we have around these key areas. If we're bullish on the ES, we like to see it maintain your previous day highs, high or low off of your 5980 for this continued pushback inside the middle of the range. If you are short bias, what you like to see is a break back underneath your previous day lows for this continued pushback towards the downside. It's going to look a lot. You can see this a little bit better here on the SPY chart. But the key levels in this case that we have marked out is going to be your previous day lows. Once again, we're going to have your previous day lows marked out, and then we're going to also have your Friday's lows marked out as well. So you can see for the SPY, it's a little bit more bullish than the QQQ, not that much more bullish, but coming into market open, you can see we're actually inside, right? We dropped underneath your previous day lows. Now we're a little bit by your previous day close, whereas the QQQ you can see is underneath your previous day close, really underneath this 520.60. So the key level for the SPY coming into today is going to be your previous day lows, similar to the ES. So if price, you want to see some more downside, really has to get underneath your previous day lows for more continuation. You like to see it stay heavy underneath this for this continued push back down towards your pre-market lows and below. If you'd like to see any sort of bounce in the overall market, you like to see the hold of your 596.50 for this continued push back inside of the range that we have here on the SPY. So the key level that we can mark out, in this case, we can just mark out this level right here, which is your 5960 previous day lows in combination with the key level on the higher time frames as well. So that's going to be the key levels for SPY. As for some names I'll be looking at coming into today. So number one, Tesla, you can see pushing all the way towards the downside here, right down towards this 325. This is a higher time frame key level. This is also where that daily gap is as well. You can see price is just kind of filling this regular imbalance, but you can see nice push towards the downside. And now right, price after having that first initial pop on the 1 hour time frame kind of got shorted towards the downside, right in towards where your key low, which is your 525. So far it is staying heavy compared to the overall market, and it looks fairly staying heavy on Tesla. So the key levels that we're going to mark out in today is going to be this 335. As long as Tesla maintains under 335, I do expect this one to continue towards the downside. So I expect all pops to be faded underneath your 335 on Tesla for this pushback down towards your 325 and below. So coming into today, this is going to be one of my top watches. I'm going to be looking for the pop and fade on Tesla. As long as it maintains and stays heavy underneath really your 335, I do expect this one to gravitate down towards your 325 and below on this name. So we can be looking for the pop and fade right off the bat. Another scenario, at least for the long position, if it comes all the way down, right, whenever you are looking for this pop and fade as well, right, how you play it, pop, and then you want to be looking for the fade. You want to take off some at this key low, which is your 325. And if it does continue lower, that's great, right? But all you're looking for is the pop and fade and potentially continuation, because it very well could reverse at this 325 and just come back inside the middle of the range. But if you're looking for the pop and fade, you want to take some off around this 325 and then leave trailers in case it does want to head lower down towards 320 and below. But for Tesla, that's going to be for the bear thesis, another bear thesis, right? Either the pop and fade, or if it gets underneath, stays heavy. This one, in my opinion, is going to be a little bit trickier if you're looking for the retest underneath your previous day lows, underneath your 325 as well. Most likely it's going to have that flush beforehand. So for Tesla, another example, if it gets back above this 335, you can see potentially kind of mean reversion back up and towards your previous day high. So this is going to be a super key level coming into today. Or if there's some sort of reaction around this 325, you could be looking for the higher low off of your reclaim of your 325 for this pushback towards upside. But I am more leaning towards the short side on Tesla, just based off the 1 hour time frame. I would really like to see if it can break underneath this key low, as you can see right here. If you can break underneath, as long as you maintain your 335, I like to see this break underneath, right? Lower highs being put in, and we continue towards the downside on Tesla as long as you maintain underneath your 335 on this name. So that's what I have for Tesla coming into today, 335. For Nvidia, this one does have earnings on Tuesday, but I talked about this level coming into this week was really this earnings gap. So you can see right here, right, big kind of gap that we have, which was your daily gap. We end up rejecting off of the top of the daily gap. The next key level of really support is all the way back down towards this 128. So you can see Nvidia right now currently right back at that retest level where it ended up breaking out from. A nice push all the way back down towards your 128.50. So now most likely, right, you can see pretty big, a lot of volatility actually on a Monday for Nvidia. Once it got underneath this key low, which was your Friday's low, ended up using this as a retest later into the day for resistance for continuation back towards the downside. Now you can see a little bit of reaction in the pre-market around this 129, 128.50. So for Nvidia, at least coming into today, a lot of volatility yesterday. As long as you maintain now your 128.50, I like to see this kind of push back inside the middle of the range coming into earnings on Wednesday. So most likely you like to see the reaction here off this 128 today, right? Potentially, if you find any sort of reaction around these key levels, you can be looking to trade them. If not, you want to be patient and wait for tomorrow, which does have earnings after close. As for Meta, this one is dropping. The next key level I have is really all the way down towards this 630, but the key levels is going to be kind of this earnings low all the way down towards this really 650 on Meta. So key levels you can mark out in this case, just draw this old low, which is your 663. So far, you can see broke underneath really your 682, which is your Friday's low. A nice push towards the downside here on Meta. The next key level is going to be your previous day lows as well. If you get underneath your previous day lows, Meta is going to see this more continued push towards the downside towards potentially your 650 on this ticker. So the next one I have is Apple. So Apple's staying strong. So you can see the relative strength here on Apple compared to the overall market. The past 2 days, big drop. Apple fairly strong and it's holding up. If the market has any sort of bounce, Apple is going to be my top watch for continuation on this ticker. So the key level that we can have marked out in this case is just going to be this old kind of earnings high. You can kind of trade this over. So for Apple, if we can get above really your 248, we're going to have this nice continued push towards the upside. So for Apple, really just based off the relative strength compared to the overall market, every dip has gone bought up. Apple really wants to push higher, but the overall market's kind of just dragging it down. So if we can get a strong candle closure really above your 248, and or if the market looks to want to bounce today, right, if you can get that nice close above really 248, we're going to see this nice continued push towards your 250 and above. So I'm still very much interested in Apple. The key level is now going to be your previous day highs. You can see multiple touches here. So what we like to see, break above previous day highs, or hold above your 248 for this continued push towards your 250 and above on Apple. So that's going to be one of my main watches as well. If the market wants to bounce, where I expect this one to have that relative strength in play. A couple other tickers that we could be looking for. Let's go on to Amazon. This one's staying heavy. So Amazon, as you can see, kind of in this nice downtrend now after rejecting off its 233. So far, not really showing any reactions around really 216. The next key levels is going to be this daily gap all the way back down towards this like 208. So you can mark this out down towards your 209 For Amazon, the key levels that you're going to have marked out now is just going to be your Friday's low. So your Friday's low is going to be key for this ticker. You can see yesterday, once we got underneath it, kind of just use this as resistance for continuation towards the downside. Now what we can also draw it is your previous day lows as well. But what you like to see on Amazon now is to get underneath your previous day lows, continuation towards the downside, or the pop back up in towards your 215 for this push down towards the downside as well here on Amazon. So let me actually change this. And then a couple other tickers that we also have as well. Microsoft, this one finally continued towards the downside. Really, the draw was going to be this 405 level, multiple touches for Google. This one, I really wanted to see this kind of hold, but with the overall market dropping, we got back underneath this 184. So we just ended up continuing back towards the downside. AMD, this one has been a nice push, right? It's been a tough kind of long, so you wouldn't be looking for any sort of long positions on AMD whatsoever. But yesterday, nice kind of break underneath your Friday's low, nice retest off this key area for this continued push towards the downside. So you can see right here on AMD, where it broke underneath your previous day lows, retest on the 5-minute time frame, and then we end up having this nice push towards the downside on AMD. And now you can see the next key levels on AMD is all the way back down towards your 105 on this ticker. So the key level that you're going to have marked out is going to be this 109. So your 109 is going to be key on AMD. You can see these are this lows right here. Kind of drag this out. So the key levels I have for AMD is your 109, and then I'm also going to have marked out your previous day's lows as well. So for this ticker, right, 109, what you like to see is either the pop get underneath your 108 for a continuation lower, or you like to see the pop and fade off of 109 on AMD. So those are the key levels I have marked out. So really coming to today, even Palantir kind of staying heavy. Palantir, the key level you're going to mark out is your 90 if you do want to see some more downside. It actually almost came back down and filled the gap. It's crazy on one day. But Palantir, key level is going to be half the gap. And now you also have previous day lows as well. So really coming into today, we're going to keep an eye on Tesla is still staying heavy. So we'll keep an eye on this like pop and fade off of your 335 or your pre-market high kind of pop and fade. I'm still interested in this one for this push towards the downside. Nvidia, not too much interested with earnings coming up. And then Apple, of course, if market does want to show any sort of strength today, Apple should be the leader towards the upside just based off of it holding up, right? Apple holding up every single day. It is at the top of the range, but if we do have any sort of relative strength, I do expect this one to have a nice push towards the upside. So keep an eye out on Apple if the market does want to bounce. And then for the SPY and Qs, we are down 3, so 1 day, 2 day, 3 days. So we're about down 3 days in a row here. I do expect some sort of bounce on the overall market. So if we do have an opening drive play, let's say towards the downside, I'm not going to look to kind of chase shorts similar to like yesterday or the day previous, because it's day 3, right? Day 3, usually what you kind of get is this like V-shaped recovery if you get an opening drive play right off the bat. So that's something to keep in mind on the SPY and Qs. We're just going to keep an eye out on Tesla. There's some nice kind of tech names setting up. So those are the ones I would be focusing on. I'll kind of lay out my game plan here as well on text, and I'll see you guys come market open.